I started streaming and I just had like a sneezing fit, so I had my mic muted. But on the hourly, we can see that it has swept some hourly lows, equal lows, and then it's just rallied from it. Like, it's gone through the New York, respected the midpoint of this wick before going, the one up to the fair value gap, and it's just reached the midpoint of this wick. So that's one pool of liquidity taken, one pool of buy side taken. I reckon we just extend up through these highs as well. So it's not really look like a trading day, to be honest, because I reckon it just rallies. It's like 1 minute structure, just looks awful. And then it'll be the same on like pretty much every other time frame. But I mean, if you were trading pre-market, I mean, like even at 8:30, it didn't really, like it just chopped. So 8:30, you couldn't have caught anything, as you were just gambling longs here. Yeah, not really much to say, to be honest. It's just rallying. It's pretty shit price action in terms of setups. Opening gap low is like all the way down here, near the hourly lows. So it's quite a huge opening gap. It also gives me more confidence that it's just gonna rally. But like, there's no way to be able to catch this rally unless you just go long in like a fucking fair value gap and just gamble it. But you're chasing price all the way up here. Like, you're in the biggest of premiums, and there's just like, what is the point? It's definitely not favorable. Yeah, so I mean, hourly just looks like it's just gonna rip up, because like this fair value gap should probably go untouched if it's rallying. But there's just no way to safely catch the rally here, or catch any movement, because there is no structure for a short at all, other than being like in really high premium. But yeah. Yep, as expected, just rallying. It's left like no PD arrays in this like rally up from 830, which just makes price look so like manipulated. Like actually just like artificial. It's like an artificial rally. Cause like, in what world does it not leave anything for us to really analyze, right? Swap this high now. We don't have to go for the second high, but it is there. See if this wick is also here. I'll do this one. Okay, let's mark it open. So opening gap's actually huge, but still, it could just send a CE, but it's actually like, wow, we're doing this in regular. There we go. Good fucking, okay. Okay, so C of the range and the top quarterly of the opening gap are on the same level. But yeah, I just don't trust a short here at all. But we'll see. Price could just stutter here and kind of stagger, and then form some structure for a short. Who knows? But with a large opening gap and price structure like this, where it's just like hasn't created any kind of structure in the rally, like hasn't formed any swing lows, hasn't formed any liquidity that we can really make a judgment of. You could just watch price if you want, or you could just leave the charts and come back to on Monday. We'll monitor it. We'll see what it does. Failed to make a higher high. Inversion failure. Potentially. I mean, like, nothing here would be a high probability. It's too early in market open with such a shit price action. You want something with, something behind it, because right now it's just dropping. Look at this. Broke this high, but it hasn't broke the actual higher high, which you kind of see a lot in during chop. Like, it'll break one high, but it won't go like the entire way through. This could be first stage. It's all on a 15-second, obviously, because there's no other structure other than 15-second. Because you have this swing there. But still, I reckon it does just drop. All of the bodies respected the upper quartile of this wick. But like, no matter what observation you make, sorry, I just need to come away. Like, you can't say it's an entry. You can be like, oh, it's respectable this level, but like, impossible to enter off of it. It's just an observation that prices do, or thought prices do. Like this, big CE. I don't think there's any like 10 o'clock driver yellow folder, but like, what's that on Monday? I guess this fair value gap is kind of less risky because you have seen and respect like this wick CE at the upper quarter of the 1 minute wick, and you've also broken through the high. So it's a little bit less risky, but still extremely risky because you're in such a high premium. So it's just not worth it. Especially because you're so close to a full liquidity. Like this fair value gap to this wick CE is 13 pips. Like, why are you entering a trade for 13 pips? What's the point? There isn't. There is no point, because you're probably risking 13. No, you're probably risking like 20 to make 13. Cool. So if we take this out, I'll just end stream because that's exactly what we thought it was going to do at pre-market. So there's no point watching the rest of the session. Like a 10 o'clock reversal could be possible, but it would just go down to the upper quarter of the opening cap if it's going to go down. But it's just not desirable price action to be just sat watching, because it's not exactly well, safe to enter or safe to watch. You've seen it take two major liquidity pools already whilst rallying all of pre-market. Literally rallied from London open and close, rallied from London close up to New York open, and it's still rallying in the open. But like a artificial rally before Trump's like, oh, I'm actually gonna bomb Iran, and then we go to zero. Is probably what's gonna happen. Or we're rallying because Trump isn't bombing Iran. But I have not checked X today or Twitter to see if he's tweeted anything. So let's do that now. No, he hasn't tweeted anything in 2 days. I don't think there's been any news. Probably would say here. Yeah, nothing's been said. Just like the most artificial rally ever. But you still can see like the structure behind it, right? You take the hourly lows and then you rally to buy side. It's the same as if it was like the 1 minute. It's just more prolonged because it's on the hourly. I think it was on the 15 minute where we had the hourly maybe. Where did we have? Plus, like, oh, it was like here, I think, potentially. Yeah, it's like swept it, so it doesn't matter. I was gonna say like if there was a candlestick that like barely touched into a fair value gap, and then the rally just went exponentially higher. I think it was here, but it had been swept during market open. Almost a fuck. Why have I forgot the name of it? Perfect imbalance or something like that. Perfect rebalance. I actually, how have I forgot that? But yeah, wicks were basically perfectly overlapping, perfectly touching, should I say? So how large is that opening gap? 7. Pretty much exactly 300-ish points. 370. Yeah, confidence was there to continue rallying. It's just mostly the entries, like how you meant to enter when the rally up looks like that, you know? Okay, we could be looking at a reversal here. Broke through this Wixie quite nicely. That's not a, I mean, it's an entry, but it's like not the best. I want to see kind of more of a, or I guess not, I guess you could just turtle soup downwards. And body's closed over the wicks though, so. Oop. I should have been a bit faster than that. That Wixie. Nice. Some days I'm just not fast enough to catch price. You know, wants to absolutely nuke down. That's my bad. If it gives me any opportunity to enter, I might do on the reversal. Have to watch out for if we get down to this Wixie either. Yeah, maybe it should give an entry. It's one of those. That was the entry there. But it could be a second stage, especially on the 1 minute. Like 1 minute's just nuked. I'm not taking this entry. We're too close to this Wixie. It could just reverse higher. It's more favourable to let a risky entry go, and give price the opportunity to play out, especially when you're close to like a key area like this Wixie. Like a lot more favourable to just let this entry go instead of chasing price. Because when you're so close to key areas like this, and you see your wick like this, or see anything where it's like prices go in the opposite direction near a key area, don't take the entry, because it can just go higher or lower depending on which the direction you're currently in. Okay, swept that low now. Unfortunately, I didn't give a extremely good entry, like when you can actually catch, where it's like, especially on the 1 minute, before we swept to liquidity. But we can still go for opening gap, like the upper quartile. CE is a bit far. I don't know if we get that far. But here you want the monitor. C of the range, this fair value gap. It's going to be the most optimal entry. Guess you could count this as first stage, right? So you could have taken this fair value gap. But it's a lot riskier to do that though. Yeah, because this was your first stage for this, respecting the Wixie, I think taking the lower fair value gap is permissible. It's just risky. Like, notice how everything today is just risky. It's not like you can enter a trade and be like, okay, my risk is 20 points. Let's try this out. It's gonna be cool. No, it's like today it's like, okay, my risk is like 50 points. Again, near the key area, we're not taking this for value gap. Could easily break through it just like it just did. I mean, even if we get up to this, I don't know if it's like a natural trade you can take because you've already stopped this low. That could be it for lower price action today. Um, but who knows? Today's a very, like, sure, you could have read price here, but getting an entry and it being, like, safe and optimal is just not what today is. It's more so reading price and learning how it works in the structure, right? So you're looking at Wixie's, you're seeing what it does with them, stuff like that. It's just a learning day. To be like, okay, price will still follow what price does, but I'm just not getting an entry. But it's still nice to see price behave. It's more so that just the entries are not optimal. Okay, so for at 3 o'clock, we're going to have this hourly wick, something like this anyway. So we have to watch for this wick C as well, which is there. Okay. That's why the 15 seconds is so beautiful. because if you're actually looking to chase price in these conditions, the 15-second will let you do that. The 1 minute will not. The 1 minute gives you this, and that's all that gives you. You have to be fast enough to know that that's a good entry. Well, not good entry, but an entry. Whereas 15-second will give you this, you know, but it's just like you broke through this, so you did expect it to go higher. Hey, round about 3 o'clock reversal, same as every day. Price will still act accordingly, it just won't look clean some days. And hopefully from this stream you've kind of taken away why this isn't favorable. Again, it's like the rally up from the hourly. This kind of price action where it's not giving you much to enter off to go long. You're in extreme premiums to even go long in. And then when it's reversing, where is the optimal entry, right? And where is it moving from that you just can't enter off of because it's too risky, right? So around key areas where there's fair value gaps and you're going back into them as you trace them, but you've just swept a key area. You're not entering on the first fair value gap because you can so easily break through it, like it did here, right? Here, this fair value gap here, like it did here, right? You swept this liquidity pool and broke through it. Price on any day can keep going higher and go to the midpoint of the range. It's just today it's gone lower, right? But this isn't an entry. This isn't where, especially not favorable, right? This is just chasing price. You've already swept liquidity twice because you've gone from this wick CE and this liquidity pool. You swept liquidity twice. It could have so easily just reversed back up. If you're entering here, it's a complete gamble on whether price goes lower. And not a favorable gamble, really. It's more like a 30% chance that it goes lower. Okay, so 10 o'clock, let's keep an eye on that hourly wick. Not because it's going to go up there now, but because I want to see, will it, like, tomorrow, did it, like, touch it in the PM session? Because I probably won't be able to watch the PM session. I'll leave it there you go. Okay, so both the, like, old premium, old CE of the range and the CE of the wick were at this level. Kind of makes me think this level is more important than I was just assuming. So we could now just reverse up to it. We're in the hourly fair value gap. We've swept sell side, right? We've swept like 3 pools of liquidity. This wick CE, this, and these lows, and now we're in the hourly fair value gap. But we are close to the opening gap upper quartile as well. So longs aren't extremely favorable, but also a possibility just to go up to this level. The breaking this high is nice for longs, obviously, but we do have to be aware of the 5 minute. Okay, you're gonna have this fair value gap that you'd have to inverse, and this one you have to get like a weak CE. No, just a fair value gap CEs, right? Think about this VI. Okay, nice. So if we were gonna go up for this draw, we would inverse this 5 minute and use it as an inversion. So it's just having the patience to allow that to, if I wanted to play out. But obviously, it could just you have to know the draws, right? If you're in a condition like this, and you're like, okay, price is clearly moving, 2 draws, you just have to monitor the draws, because obviously we didn't know where it could have gone, if it's going to go up. So just note your draws and then wait for an optimal trade. That is all you have to do when you come to finally trading by yourself, right? Which is obviously easier said than done. But it's fine to just sit on your hands and let price do what it wants. Because some days you just won't be able to catch it. And it's a lot safer to try not to catch it than to force it every single day, right? But price has still reacted and still played out how it would on a regular day. It's just the trades, the entries themselves haven't been optimal. So you've just sat on your hands and you've just let price play out and you monitor what it's doing, right? So it's still educational in the way of like, okay, price is reacting this way and it's going to these liquidity pools, right? It's just the trades themselves and the entries themselves haven't been optimal. So it's just learning to sit on your hands when that's the case. You can still watch price like we've done today, but just like be okay with just sitting on your hands and just watching price. Still like being able to locate the draws and watch price go to them. That's still like, dude, you're able to read price, which means when the trades are optimal, you're going to be able to take them exactly to those draws and, you know, be profitable. And especially if you have the ability to sit on your hands on days like this. This is where risk management, or this is what risk management is, right? Being able to just watch price on certain days where it's not optimal. But cool. That's 10 past 10. We've just hit opening gap of a quartile. I would say that's it for the session, right? Because you've taken buy side and now you've taken sell side. Anything here, anything like around here, you can still watch, but I would say the session's over, right? So hopefully that was educational. Yeah. You know, any questions, drop them in the comments. All good. Or just fucking ask me because you have my number. All good. Yep, and I'll catch you on Monday.